So good morning, guys. Good morning. Hope you're having a wonderful time. You're enjoying wherever you are. So it's on Wednesday, on the 21st of July. So July is almost over. I think we have 7 days left now until July is over, and then we'll be moving to August. So I think the second half of the year, the first month is almost gone, and I don't know what you're working on in your trading. Anyway, so today I'll look at different markets. I think on Monday I shared a couple of setups which played out really well. I think oil has gone down significantly. We're now trading at 67.1. Gold, still a little bit fishy. We haven't gone up or down. We're just dangling within the 1800 level, 1800, 1790, 1825. So I'll share with you what I think about gold. GBP USD down. The dollar quite moving higher a bit to 93.1. I still think we have some upside. I was also sharing that with you guys. The Dow, we've seen a collapse on the Dow. We've seen some collapses on the Nasdaq. So we're getting some corrections. I think we are in a phase whereby markets are correcting after long extrapolated moves to the upside. We're getting some significant corrections. Do I think this is the beginning of a bear market? Not really, because the fundamentals have not changed. So I'll share with you also what I expect in the fundamental space. Today we have the Feds, tomorrow we have ECB. So we're really keen on the monetary policy. If you understand how markets work from an economics viewpoint, you'll understand that you really need to understand how monetary policy is moving. For example, in the case of a rate hike, I think the only reason why gold isn't moving where I expect it to be moving is because there's a very high chance we could see a rate hike very, very soon. So markets are pricing in a rate hike in 2023, but depending on how inflation is spiking, we could see a rate hike come in faster than we expected. If that's the case, then we could see some minor corrections in the market or some significant corrections depending on the jump again in the rate hike. Also, we have the COVID variant now, the Delta variant, which is spreading across countries. I think everywhere in the world, COVID cases have spiked, including Kenya. So we've seen a jump from some levels to some significant levels. For example, in the US, we've seen a spike from about 10,000 cases a day to about 30,000 cases a day. So that's a big spike. That's some risk. But most nations have actually gotten used to COVID, so it's not really a big risk. But markets have to price it in again, because if the cases come in and become very, very serious, then you could see again some lockdowns maybe, or you could even see some travel restrictions and such things. And such things will obviously affect asset prices. So you really need to be keen on that. But either way, technically we still make decisions. Technically, we just focus on the fundamentals to understand the long-term perspective on what's happening on the markets. So what are we working on our end? We're working on something in the crypto space. So for now, Bitcoin is down. No one is interested anymore. So when Bitcoin was really, really booming, we had people calling us and asking us questions and asking us about where crypto is going, which coins they should buy. I'm surprised that no one is calling me anymore. But anyway, I think this is the time to buy. Personally, I've been adding to some coins. I think when everyone is not interested, that's when you should be buying aggressively. Like Buffett said, when there isn't much greed, you need to be fearful. When there's greed, be fearful. When there's fear, be greedy. So I'm working on that. I'm being as greedy as possible. So I'm buying as much as I can with the money I have. I think this is a very good opportunity to buy some of the coins. So I might also look at some of the cryptos that I think are good bets for me now. And where I think markets are ultimately going. I think Bitcoin could hit 20,000 again. And if we get to 20,000, that's a good buy, because the next target for me on the upside will be sit at around 100,000. So I'd make about a 500% return. I'm not saying it will happen this year, next year, or next year, but one. I'm just interested in the level of return I'd make. I'm not interested in the time it will take for me to make that return. So that's how we work on our crypto assets. We are not traders there. We are long-term investors. If you've watched our episode, you'll see how we tackle the crypto scene or the crypto area. So that's what I'll be talking about. And we're also moving to Discord. So we're finalizing some changes on Discord. We're bringing up a new website. So we have a couple of things that are coming, a couple of interesting things that will change and shape up a new way of looking at markets. Again, among those who have joined the Zoom, if you're a good trader, if you've been trading, you feel like you're good, you feel like you understand markets, and you're willing to share some of the insights you've learned on your trading, please hit me up. We'd love to have you as a guest on our podcast. So we are bringing up very, very interesting guests. Also, we have, for example, we have a guy who's almost getting close to getting the public money license. It's a guy who's trading very, very well. He's made over 200% return over the last 2 years. So we'll have him on the show. We have a guy who's managing over 20 million shillings. We'll also have him on the show. We have the SIB guy. So we have a couple of interesting people who are coming up on the next episodes. So just be keen on watching some of the episodes we'll be releasing. And also, if you're looking at other things, for example, if you're interested in crypto, done some research, you're good at it, hit us up. We'll also love to have you on the show. We're learning a lot. We're just trying to shape up this industry again. So with that said, let me jump off to the charts. Let me share what I have on the chart. So in case you have any question, please share it in the chat room. If you don't have a question, then I think I'll just proceed. Anyway, I'll start off with gold. Gold is my favorite asset. I've made money on gold, I've lost money on gold, but I love it because it's a volatile asset. This is oil. So I'll start off with gold. So this is gold. Let's go to the daily chart first of all. So I think on Monday when I was doing the analysis, I talked about this level being a very, very dangerous level. Dangerous in the form of you could be right on the direction, but you could be very wrong on timing, because markets can spend some time on the fair value area, moving higher and down, higher and lower, so just tingling, not moving to any significant direction. So today I think the decision of the Feds today to leave rates unchanged and what they'll say about the dot plot will determine the ultimate direction of this market. I'm very, very keen to see how today will close. Will we get a breakout to the upside or a breakout to the downside? On the 4-hour chart on Monday, I'd shared a different third trend line bounce. I think for those who attended the Zoom, they spotted the third bounce, but immediately we got this move lower. So on Monday, we had this bounce here. Then we got this move lower and a quick comeback again, taking us to 1825. And then yesterday, we had again another collapse, and we're still finding some support on that trend line, 1807. I do believe as long as we're above 1800, I'm still very, very bullish. If we break 1800 and we start moving lower, honestly, I don't have an acute target for me to execute this position. So once I don't understand what's really happening, both from a small picture perspective and from a big picture perspective, I tend to avoid trading such markets. So in the event that you see a break of 1800, but in the event that you see a change in monetary policy, then I can trade that because I understand why we have broken certain levels. But in the case that I don't understand, I'll tend to stay out of the markets because I assume markets are just ranging. They're not moving either higher or lower. They're just trading between 1825 and 1800. From a big picture perspective, you think about it, you can see we had 1825. We had a break to 1835, then a comeback again to 1800. We had a move to 1825, and now we are seeing a comeback. So we could see again a spike of 1800 and then a move again to 1825. So we could stay here for quite some time before we break out. Ultimately, according to my pattern formation, I'm looking for a breakout to 1855 if we don't get a change in monetary policy today. Next, I look at oil. Oil finally making a comeback. I think on Monday when we were sharing this setup, just looking at it from a daily chart perspective, we were trading at the 71 level. I think this was the Friday's close, the indecisive candle. And then on Monday, we opened with a steep collapse from about $71 a barrel to trade as low as 65.55. So about a 500 pip collapse. It was about a 6% collapse, I think, on Monday. If I just go down to the 4-hour, it was quite evident. The only thing was you couldn't tell it would come that fast. So that was unexpected, at least for some ends. But with the production increases, with rates trying to move higher, with the dollar coming back significantly, then this was quite expected for oil to move down lower. For people like me, I never capitalized on this. You may wonder why. Because I've learned to be disciplined over the years when I'm trading. So as much as I have the direction of the market, I tend to trade certain setups, and I'm very, very patient to wait for those setups. So what am I looking for? I think I'm looking for the next collapse lower. This is the trade that will make me money if it takes place. So I'm looking for this rebound. It will take some time, probably 3-4 weeks for it to come back all the way to 72.5 or 73. I'm not really certain. But once that happens and I get a good signal, then I'll be very, very quick to go down short looking for the markets to move lower. Currently, I have a long position. I had a long position which was executed yesterday. We're almost getting close to my target. It was a short-term trade. Now we're getting close to my target, 67.9. If it was long time ago when I was starting my trading, I tend to be greedy and start moving my targets. But again, I've learned not to do that because it doesn't work in the long run. So once it gets to 67.9, I'll get out, as much as I think we could be moving to 70 and even $72 a barrel in the long run. I think the accurate target for me is 70.5. That's a good conservative target if you're trading this market and if you have a long position in that market. Next, I look at GBP/USD. So on Monday, I talked about a probable collapse to 1.3650. For those of you who are following the Zoom session, I think we talked about this probable collapse to touch this level, 365, 367. Then I was looking for a bounce from this level to take us higher. Now that one, I was wrong on that. I think yesterday I had a long position. I was very, very quick to execute because once I have an idea and I get a signal, then I'm very, very quick to come in. So I bought at the 1.3650 level. After this hammer formation, I bought, but you can see clearly markets went again lower. This could be just a minor movement in the market because markets again are not perfect, and then you could see a comeback again to 1.38. But I won't be buying. Once I'm stopped out, I don't come back to the markets. These are my rules. You have to devise your own rules when you're trading. So for me, I don't come back to the markets once I've been stopped out, because I observed some of those trades end up losing multiple times and you end up losing a lot of money just looking for an idea to work, and you don't trade your ideas, you trade specific setups. So what I'm looking for is a move back to 1.38, but we could see a move to 1.35 first before getting the move back to 1.38. In the event that you see this move to 1.35, I'll be buying from the 1.35, looking for the 1.3750 level, depending on how next week opens. I don't think this is a trade for this week, especially if we get a move to 1.35. If we don't get a move to 1.35, then probably this is a trade for this week, at least today, depending on what the Feds will say and how the dollar performs. You could see the pound going back to 1.3750 very, very fast. But in the event that you see continued downside momentum, then I think 1.35 is a conservative target, and you should be patient enough to wait for that level to be attained before making any decision in the market. So if you want to buy, if you're looking for a buy, I think a right place to look for buy is after a move to 1.3650. If you start trading above that level, then momentum could pick up and we could move to 1.3750. So it's an hour into London session. You can see we don't have enough downside momentum to take us lower. Instead, in fact, we have some bullish momentum coming back into the markets after the first hour of London. So probably we could see some move back to 1.375 and then 1.38 level ultimately before a collapse to the downside. Next, I'll look at Euro Yen. Euro Yen has been quite interesting. Also for this one, I'm looking for a very beautiful trade. Let me just look at it from a daily perspective. So yeah, this is the daily chart. So on Monday, when I was doing the Zoom session, I talked about a probable collapse to 127.5. Do I still hold that idea? Yes. So what has changed? It's normal when markets are moving down to have minor corrections. Those minor corrections should act as very good entries and exits if you're trading. You're not an investor, I assume you're trading on a day-to-day basis or on a week-to-week basis. You're not making long-term decisions. So looking at it from a big picture perspective, I still hold that we could see a move to these levels, but for now I'm holding a long position back to 130.5, and if that takes place, then you could see this beautiful third trend line bounce, and then again I think that's a very, very beautiful setup for you to make money on. So we could see that move back to 130.5 and then a beautiful collapse down to 127.5. So I'm very, very keen on whether we'll get this move back up to 130.5. Already momentum is picking up. I never got to buy this one. If I had bought it at 128.5, 128.7, I think that will be a good trade to 130.5, about 200 points. And then you get the deep correction again down to 127.5. But some of these trades are not for this week. Probably next week when we see how markets will open and how they'll start trading. Next, I will look at the Dow. The Dow has gone back again after a steep collapse down. So on Monday, we had a steep collapse on the Dow. I think on Monday when I was doing this, I talked about this as a double top formation, a probable collapse down. I think I talked about this pretty well. From the 4-hour perspective, I was talking about a break of this channel, and you can see we had that move to 34,000, a psychological level, and then markets are now officially moving back. Do I think this is a reversal? Not really. So what am I looking for? I'm looking for a clear retest of this channel. If we get a retest, depending on what the Feds again will say today. So there's a lot that is still hanging or uncertain. So we don't really know how things will turn out. But we expect there's a high chance the Feds will leave monetary policy as it is, because they've not gotten a full economic recovery yet. If we get to 78.6 and I get a good signal and the Feds leave monetary policy as it is, then I might be trying or willing to short this market looking for 33,500, which is the next downside target. 33,500, 33,400, 33,000, ultimately this level. But just be keen on what will happen on this market. The signal that will be formed at this level, this could just be a dead cat bounce as we start the long correction down to trade as low as 33,000. So if you know what a dead cat bounce is, it's basically when the market starts, when a bear market starts, we normally have some bounces taking us higher. If you think this is again a good entry to buy, you may be fooled, because again you can see we have just started a collapse from 35,000. The Dow is quite volatile, so it's normal to see very fast moves higher and lower. So let's see what will happen. Will you get a signal? Will you not get a signal? And then we can decide how to position ourselves in this market. Nasdaq, the same scenario. So the Dow and Nasdaq are quite similar. On the daily chart, you can see, if you just visit the daily chart, you can see this looks like more of a correction that is incoming. So this looks like the start of a correction, not the end. As you can see, you had the first move, a correction, second move, correction. Now I've gotten to 15,000, a psychological level. I talked about a probable move here, then a move to 15,500. And you can see clearly this looks like a probable move. But now I'm 50-50 again. We could also see a collapse back down to trade as low as 13,800, especially after we've created new highs. On the 4-hour chart, I'm still looking for good entries, good setups, but I can't see any setup on the Dow on the Nasdaq that can be executed. So for now, I think on Friday I was talking about this break retest took place and had this drop. Now we've gotten a comeback. So it's really hard for me to say now where to execute your longs or where to execute your shorts, but let's see how markets develop. So once we open up the Discord channel, these are some of the things that we'll be sharing, because sometimes I may tell you that I'm looking for a long position in the market because of ABCD, but when the facts change, I also tend to change my mind. So when that's the case, which happens often, I change my mind and I don't share it with people. So you may find that you're still clinging to the old bias that you had me share, while personally I've changed and I'm looking for something quite different. So someone is asking me to do GBP-AUD. Let me go through GBP-AUD. So this is GBP-AUD. Let me try first changing this chart, because I don't really trust this chart. The Owanda chart. I do believe in my FXCM chart or whatever. GBP-AUD. Yep. So yeah, this is GBP-AUD daily chart. Let's start off from the weekly chart. Yep. I have a lot here. Let me just clear it fast. Okay. So GBP-AUD weekly chart. We've just gotten a retest of the central pivot level. So I think the year started and it started moving high, and you've finally officially gotten to the 1.8650 level. And the question is, will you get a continuation to the downside, or is this the beginning of a move again higher? If I just go down to the daily chart, I think the last time I looked at this pair, we talked about 1.85 acting as a good level of resistance, 1.85, and you can see it was taken out by this candle with some momentum. We had a retest, then a continuation to the upside. So we could see 1.87 pretty soon, especially as the Australian dollar keeps on getting weaker. So we could see 1.87 very soon. On the 4-hour chart, let me just first look at some of the patterns information here. So you just need to look at basic patterns. I think your trading should be quite simple if you're doing it well. If it's not simple, then there's a problem. Yep. So I can just tell that 1.87 could act as a good level of resistance, and it could be getting closer to the start of a collapse to the downside again. So, and if we start the collapse to the downside, which level will I be looking for? I'd be looking for a move back. Actually, we're already struggling to go above this level. So if I was to look for a move, I'd look for a move back to this level, 1.80, 1.81250. I think that's the next downside target. But if I just look at it from a 4-hour perspective, so let me just remove these ones. 4-hour perspective, we took out 1.85. You can see the consolidation coming in, a move higher, but again, you're still in a consolidation. For me, no setup here, at least for now. Till the daily chart forms a pretty solid pattern, that's when I'd start trading this. But if you were to get a extrapolated move to 1.8750, I think it's right for you to think about a short position from that level, taking us down, because the daily chart looks like we could see that move to 1.87. A short squeeze for the people who are already shorts. You can assume that majority of the people who are already coming in short have their stops at the 1.87, 1.8750. So if you get a move to that level, again, there's panic in the market. There's a lot of fear. So many people will come out. And when you place your entries where others place their stop losses, you tend to find very good entries, especially for those people who trade out of the fear of missing out. So I think that's my outlook on GBP USD. And if there's any other question, I'll answer. If there's no question, I think I'll stop there. Someone is saying I look at Aussie dollar. Aussie dollar is not a pair that I trade, but I'll try and look at it. I think it's a very slow moving pair, so I don't understand how you make money on such a pair, but for those who do, I think it's wise or it's good for you to keep on doing what you're doing or keep on trading what you're trading. Wow, so this one is quite interesting already. Just by plotting that, I can tell we've gotten to the 61.8 extension. So we had a move higher, a correction to 61.8, and now we've gotten to 61.8. I think for Aussie it's a buy. You should be buying this market now. The 0.7250 could act as your level. So this 0.7250, I don't think we'll go below that level. If I just look at it from a 4-hour perspective. So yeah, these are the patterns we are watching. I think for me, I'd want to be buying this market. I don't trade this market, so you can see I'm really struggling to come up with clear patterns. So I'm looking at it for the first time in a very long time. But I think it's a buy because I'm also looking at the dollar correlations. For me, what I'd advise you, let me just go back to the daily chart. I think the patterns there are quite clear. Let me not go down to the lower time frames, and I'm not really keen on what's happening there. So what do we have? One, we have this. You can just draw a simple channel from there, and you get something of the sort. Yep. So we've gotten to the bottom of the channel. You can see clearly from when we started moving lower, 0.78, we have now moved lower to 0.7250, which is about a 600 pips collapse. So as long as you're trading above 0.7250, I think I'd be looking for a long back to 0.75 first target, and then probably 0.7650. This could also be a flag formation. So let's see if we try and draw just a simple channel that we'll get in. Yep. So we'd be looking for a third bounce of that channel and a continuation to the upside, but you can see we had a break instead of a bounce. So again, even if you're buying this now, you need to be even more careful. Yeah. So I think if you're buying this now becomes your first target. 0.745, a retest of that breakout. First of all, if it was a false breakout, then markets could keep on coming back higher to 0.6570. So that's why I think I'll stop. And if there's any other question, I'll answer. If there's no question, I'll stop there, and I'll see you guys on Friday. Okay, I can't see any question, so I think I'll stop there. I'll see you guys on Friday. So today I was alone. Caleb is not in, so he'll be looking at other markets sometimes later. So see you guys. Peace.